Good afternoon, everybody. Welcome to our webinar this month. You see by the title there, having the correct mindset for trading. So I know some of you have been waiting for something on trading for a while. I know it's supposed to be mental health month in October, so this is why I was thinking about mindset. But anyway, the whole idea about mindset is just controlling your emotions when it comes to trading. I believe it's very important. So managing and controlling your mindset is one of the key things that differentiates an experienced trader from a novice or a beginner trader. But it also requires consistent practice and discipline, and we'll be discussing some of those things within this presentation. So it also entails being dedicated, being focused, being disciplined, and being confident. As I say, we'll go into more detail on that. So welcome. My name is Sean van den Berg. I am an investment specialist at PSG Wealth. I'll be discussing how to approach trading with the right mindset. Okay, so here's my little agenda. Let's move to the right slide. There we go. Yeah, so just our normal three little topics quickly, subtopics. But the main thing is just to kick things off, to give you some context. What do you think is one of the biggest reasons why people lose money or traders lose money in the stock market? Obviously, the main reason is lack of knowledge and experience, or lack of knowledge and education, rather. Many people are drawn to trading, and we saw that within the COVID period. We're sitting at home, you're bored, and people started trading. But I also believe it's an easy way to quick money without investing time and effort. And I think a lot of people also burnt their fingers in the COVID period. So yeah, it's a dangerous misconception that often leads to losses. People burn their fingers and they'll never go back to trading again. Okay, so trading can be profitable, but as I mentioned, it is also a risky activity. So I always say to myself, it's not about making money, it's avoiding losses. So that's what it's all about. So with any trading, there's potential for losses as well as gains, and success in trading, as I mentioned just now, does require some knowledge and does require some experience, but also a sound trading strategy. Trading does come with greater risks compared to investing because of the shorter timeline to recoup losses. Okay, so that just give you some insight or what do you call it, context. Okay, so let's move on to first little topic there. What are the challenges that people go through in trading? You can also look at this as why do people fail when trading. So if lack of knowledge is one of the main reasons why people trade or people fail, I would say that psychology or mindset comes in a close second. So to say that being a successful trader is 30% strategy or methodology and 70% psychology or mindset. Okay, so a trader's attitude or psychology determines not only how they approach their trading, but also how they'll approach the share market. Obviously, in this context today, we're talking about the share market as opposed to forex trading and things like that. Okay, so becoming a trader who is consistently profitable, and I think that for me is my number one goal as a trader, to be consistently profitable. But it is rare, and I've been trying to work on that for many years. And but it's also a fact that hinders one from making a firm commitment. So yeah, it does take a commitment, and we're going to into detail just now. So many professional traders obviously would warn a novice or beginner trader that are trying to gain some insight that trying to find trading success overnight is daunting, number one, and number two is unrealistic, and number three, it's also very discouraging, as I mentioned, that whole story about what happened in COVID. So the best thing to do is take one step at a time, one day at a time, one trade at a time. Gain knowledge, there's so much information available in books, in courses, in webinars. There's so much websites available that you can gain knowledge. Okay, so develop those skills and then gradually increase your what we call position size, your size of your trade as you gain more and more confident. And that, to me, is the bottom line: is as you gain more and more confidence, you'll be making more and more money. Okay, so first commit to those smaller goals, and then we take it from there. Okay, so let's get into the nitty-gritties here. So first of all, I think the big thing for a lot of people is market volatility. You know, market volatility can be defined as the speed in which the share price changes in a certain period. In most cases, advanced traders would love volatility, but obviously for a novice or beginner, volatility can be very dangerous because obviously leads to bigger losses. So the whole idea here is to, if you look at a solution, is create a strategy. And obviously in today's context, we're not talking about strategy, we're talking more about mindset, but create a trading strategy that benefits from substantial volatility if you're into trading at volatility. But also, a way to manage risk is to embrace what we call position sizing. And again, we'll talk about it in some other webinar. We talk about risk management or money management. Okay, so talking about market volatility, market uncertainty, I'll be discussing the 3 types of risks that traders face in more detail in the next slide. But anyway, you can see the next point there is emotional stress. And I think that's one of the biggest obstacles in the way for most people to become a successful trader. The 2 biggest emotions as such is fear and greed. They tend to be the 2 biggest emotions that hinders a trader's progress. Fear of losing another trade, or it can cause you to exit a trade earlier than you should have, or maybe not even opening the trade, or what I call pulling the trigger in the first place. So greed, on the other hand, is wanting to make as much money as possible in the shortest period of time. That can also cause you to keep a trade open longer than you should, or entering trades when you should not have. Okay, so the solution to that scenario is obviously create a trading strategy that doesn't expose you to a lot of risk. For most, we're going to, as I say in a few slides time, for most novice traders, the best type of trading would be a long-term trading, which I call it as the safest way of looking at it. As I say, I'll go into more detail a bit later. Financial risks, obviously, that's what comes to mind to a lot of people. The big thing here is that it's a fact that 80% of traders lose money. The unpredictability or volatility of the markets plays a big role. Many people find it difficult also to raise capital, your starting capital, to trade, and we'll touch it in more detail a bit later. Some people like to get involved in what we call leverage trades, or into using geared products like single stock futures and CFDs. Just understand, obviously, you're gaining additional exposure, and it obviously substantially increases your risk. So it all boils down to having a good strategy, having several risk management strategies in place, and these all help you prevent losing money. As I mentioned just now, it's not about making money, it's avoiding the losses. Okay, information overload. I think this is also for a lot of people a big barrier. It was for me for a long time. Get overwhelmed with too much information, and the bottom line there, you get too much information, you get what I call analysis paralysis. Analysis paralysis, you're confused, you don't make a decision, or you don't make a trade. Okay, so the whole idea here, the solution would be to create a specific news feed. There's one website I like to use a lot. It's called investing.com. Investing.com. And obviously you can link through to the South African version of it. What I like about it, you can create watch lists and things like that, but also very importantly, it's got what I call a screener. You can screen different shares based on fundamentals and technicals. Anyway, that's one way of looking at it. Another way, on a PSG platform, on the Viewpoint Plus platform, you can create a watch list, and then you can link alerts, and specifically sense announcements, stock exchange news announcements for tailored information, and you can get emails and things like that to alert you to specifically trade updates and things like that. You can also create a trading journal. The whole idea of the trading journal just simplifies how you break down the data and then you execute your trade. There's a bit of record keeping. It helps you to, with hindsight, to look at your trades and see what's going on there. I believe that's one of the most important things as a trader, apart from a trading plan, is having a trading journey. Technology issues, obviously that's easy to understand. You might have problems with internet connection or problems with load shedding. you need to have a plan B. You know, a lot of people use their phones, and that's another thing you can use is trading a plan. So the whole idea is to have obviously access to faster internet connections and have reliable hardware. And then time commitment. You know, a lot of people think trading is easy. There are some strategies you need 50 minutes a day. Some other strategies like day trading, you have to be sitting in front of the computer the whole time. So it depends on that. It depends on the work that needs to be done. Most people, when they first start out, are doing this part-time, and I suggest do it part-time. Start part-time before before going full-time. So these are just some of the challenges that you might face. You'll also find that there's a lot of other little challenges, but let's talk about those risks I mentioned just now. There's three types of risks. First of all, obviously, three categories, we put it that way: market risk, investment risk, and in trading risk. So within market risks, basically these are things under your control, the market in general. But as you know, markets are bound to rise and fall. Understand that the market goes up and down, okay? But also understanding the risk you face when they do helps you manage your money better, okay? So there's an old cliche: buy low and sell high. You can also sell high and buy high and sell higher. You can also go short. You can sell high and buy back later. There's all of these different ways of looking at it, but just obviously these tools that help you to understand those risks and help you bend the odds in your favor. I use what I call probability trading, being the odds in my favor, increasing the probability of success. So within market risks, there's a thing called marketability risk. The main thing is how liquid is your investment. You might be restricted from selling your shares when you want to do so. And obviously your target selling point won't mean much because you're restricted. For some traders, this isn't an issue, but if you, for example, choose to invest in a small cap stock or an illiquid stock, you might not be enough buyers in that stock, and you might have to lower your prices and things like that. And when we talk about investment risk, there's opportunity risk. You take your money out of cash and you're taking a position in a certain stock. So when we talk about investment risks, and first of all, we talk about how you invest your money and how you manage your entry and exit points when you buy and when you sell. There's two critical things to look at to manage that. Opportunity risk. These are balancing what I call trade-offs. You're tying all your money into a certain stock, and that's where precision sizing comes into account. Again, it's another webinar, but basically position sizing. If you're trading with 100,000 Rand, you should never be allocating more than 2% of your capital to a specific trade. I'm now talking about leverage trades. So 2% on 100,000 is 2,000 Rand. Okay, so you still got a lot of money. That's in cash. So that's what I call a trade-off. But you want to be in a situation where you take all your money, it's like playing roulette, playing the red number or playing the black number, put all your money on black and hoping you're going to win. That doesn't work like that. Yeah, sometimes it might be in your favor. The share goes up like crazy and you made a killing, but you won't be able to do it consistently. And that's trick, being consistently profitable. Concentration risk, the same thing as putting all your eggs in one basket, as I just mentioned now, putting all your money on one number. Okay. And then trading risks, this doesn't happen too often, but these are some of the risks. These are unique to trading. Obviously, it increases with trading volumes. The main thing here is what you call slippage risk. It's the bids and offer spread. When you want to open up a trade, obviously you're buying from a seller and vice versa. So those things can be widened. You can mitigate those risks by stipulating your price, what we call limit orders. I personally like to have market orders wherever the market, especially on liquid stocks, we're trading with market orders. But one way to limit that slippage is to stipulate your price, what we call limit prices. And then poor execution risk. This is having difficulty filling your order. Especially when you want to trade shares, you want to buy 100 shares and you can only get 50 and there's not enough sellers in place. Those are the things when I talk about it. Then gap risk. This is for when you, for example, the share might close at 25 Rand today and then tomorrow opens at 20 Rand. That 5 Rand gap, you might have had a selling, your exit price might have been at 24, now it's got gapped right through that. So yeah, might be surprising news on the stock. Just understand those things do happen. Okay. Obviously, day traders don't have positions overnight. We'll talk about it in the next slide. Okay, so let's talk more about mindset. And obviously, this is the whole gist of the webinar today. When we speak about trading psychology or mindset, we mentioned just now, we speak about your frame of mind and emotions when trading. We speak about discipline and being able to master your mind, master those emotions rather, to become a ruthless trading machine. Okay, so the correct mindset in trading is often what I call the missing link to performing well. So to get steady returns or steady growth, you must focus on the trading mindset just as much as you do on analysis or strategy, and obviously risk management. Okay, so what is the correct mindset in trading? I touched on it a bit earlier, but correct mindset in trading is one that's dedicated, focused, disciplined, confident, has no ego, has no fear of losing money, and has no fear of losing rather, and then there's no detachment, detachment to money. But you know, the main thing is just again, develop strategies, and the main thing also what's important is having the discipline to follow your strategies. Okay, so if you can't follow the rules of your strategies, you simply have no trading strategy. So trading discipline, following those rules, is what most traders would need. The correct mindset in trading is what separates good and bad traders. That's sort of just now. And I'm harping on it, but that's what it's all about. Okay, so cool. Let's move on to there's 10 points I want to highlight for you. It's first of all, you need to be dedicated. It's being relentless in developing those skills and how to master yourself and your risk tolerance. Take one thing at a time and master it. Master greed, master fear, and so it goes on. Okay, but also, before you can get into developing training strategies, is know yourself. And that's the next point there. Know yourself, develop quantified strategies, and that's why it's so important to have these things all written down, what I call a trading plan. But it all starts off with, as I was saying, understanding who you are and your personality traits, because that's important to understand your personality, because you need to match your personality to the trading style. What is the best personality trait for trading? Are you introverted? Are you extroverted? Are you disciplined? Are you able to work on your own? Are you confident by nature? What is your goal of trading? My goal of trading, as I mentioned just now, is to be consistently profitable. Now, why do I trade? Obviously, to make extra money. Okay, but also to me, it's fun, and it keeps my finger on the pulse. Call it that. So trading is solitary. It attracts people that are introverted. I must say that. I've met a lot of people that are introverted. It is a solitary game, and hence the whole attraction during COVID, working at home. But the people that with intuition are backed up with gut feel, they can get the game going in a few months or a year or so. They can get going very quickly, but it doesn't last very long term. Okay, the people that back up intuition, that gut feel with thinking, they do last longer. So it's a thinking man's game. So it is a bit more, more calculated risks as such. But the thing is also, it's time. You focused all the time. If you had to decide to open call it a pizza shop, pizzeria, takeaways, you must, you'll have a business plan for that. If there's a franchise, obviously they've got all the systems in place for you, how to proceed and hopefully make a success of it. It's the same thing with trading. You need a business plan, develop some kind of methodology if you want in a successful trading career. The methodology and the techniques must be linked to your dominant personality trait. And that's what I mentioned just now. So it's better to have a bad methodology than having no methodology at all. Better to have a bad trading plan that we can tweak than have no plan at all. Okay, so trading discipline to me is one of the most important things to have. If you had to look up a definition of discipline on Wikipedia, it says self-discipline can be defined as the ability to motivate oneself despite a negative emotional state. The qualities associated with discipline include willpower, hard work, and persistence. Self-discipline is a product of persistent willpower. Now, whereas willpower is the strength and ability to carry out a certain task, self-discipline is the ability to use it routinely and even automatically. Okay, we say willpower is like a muscle, whereas self-discipline supports and controls the muscle. Okay, so there's certain rules, and that's what a trading plan is all about. Certain rules in place that are needed to trade well. Even the legendary trader Jesse Livermore, he was a very famous trader way back in the 60s, or even before that, used rules to limit himself doing foolish trades, and that's the whole idea, is to limit yourself doing foolish trades. The other quotes from a guy I have a lot of respect for, a guy called Victor Sporindo. It was more famously known as Trader Vic. He's written quite a few books. His two most successful books is Methods of Wall Street Master, and this other one was Principles of Professional Speculation. But anyway, he's been involved in the market for over 45 years, and he's managed his own money and money for people like George Soros, etc. But his quote here says, the key to trading success is emotional discipline. Making money has nothing to do with intelligence. To be a successful trader, you have to be able to admit mistakes. And I think that is one of the most important things. Make a mistake, learn from it, and move on. Okay, people who are very bright don't make very many mistakes. Besides trading, there's probably no other profession where you have to admit when you're wrong. In trading, you can't hide your failures. Okay, the money talks. Okay, so yeah, important thing to look at there. Let's go on with our next point here with a good trader. There's a thing, as I say, your goal is to become a confident trader, but also you don't want to be overconfident. And I think that is the biggest thing there. When you're confident, it's a lot easier to execute your trading plan, your methodology. To become confident, you acquire the mentality mentioned earlier in the previous slide, that emotional discipline. Admit when you're wrong. That's what's so very, very important. The other thing is, as I mentioned now, overconfidence is the worst trait a trader can have. The thing with overconfident traders, in their predictions, they trade more frequently and incur greater losses. And that's the stats for a lot of these guys. So this applies to those that are extroverts or more impulsive. So linked to that also would be a trader holds no ego and beliefs. Someone that has this heightened sense of self-importance. I think you're going to get burnt out in trading. So the idea is that, as I say, admit when you're wrong. And people with big egos don't like admitting when they're wrong. So set your emotions aside. And then second last there is good traders have detachment to money. The whole idea about money, it's just a method of keeping score. Don't focus on money. Your focus is to be a stable, how can I say, don't be misled by randomness in the markets. Stop thinking you're in control of the situation. Money is just an obstacle. As I say, it's just a way of keeping score. So be detached from money and just keep on focused on trading. I look at it this way. Think of your trading as a long-term investment. I've been involved in the market for many years, and that's how I look at it. It's a long-term investment. And then lastly, there, fear of losing. If you're a trader, you should say, what is that? For introverts, the fear of losing money can be an obstacle. Still focusing what to do. You think about how much you can lose. You take profits quickly just if you're well. You might as well end up increasing your risk. So the whole idea here is to just take a break, take a step away, and then review and then come back. And that's where the trading plan is also part of that. Okay. So I believe this whole thing about trading is a probability game. You find a profitable trading methodology or trading strategy, you test it and you implement it, and that's how you start making money. Yeah, so that just gives you some insight to the mindset. So let's talk about which trading style is best for beginners. I presume that some of you might be novices or beginners, or some of you might be considering trading. The important thing here is no matter what style you choose, you must make sure that it truly fits your personality. It's not mutually exclusive. You can adopt different trading types at the same time. So it all depends on your financial strength, how much money you got to start off with, your time available. Obviously, as I said just now, your knowledge and skills also. So there's no one size fits all solution in trading. Okay, but it's all lies with being self-aware, being continuous learning and adaptation, being flexible. I think that's also very important, being flexible. But also being faithful to your trading style. You might start off and you think, okay, we'll talk about it in the next slide, I'm a scalper, but wow, this is too hectic for me to be flexible enough to switch into another trade and things like that. But also give yourself enough time. Be comfortable with the trading style, remain faithful to it, and obviously that loyalty will pay off. So there's 4 trading types. It's very basic 4 trading types: scalping, day trading, swing trading, and what we call position trading. So it all depends on time, your time frame that you're in the market, and how long you're in the trade for. So scalping, and also I've tried to use an analogy of 4 animals. If you're a scalper, using the analogy, you have a cheetah. You're going for high speed, you're going for high profits, and you're going for high risk. Okay, so that's a cheetah. Your objective is to grab very small amounts of profits as many times a day. Okay, it's best suited to active traders who can make instant decisions and act upon them with no hesitation. So these are very, I call them cowboys, but they can act on the trades with no hesitation. Okay, you can see there the time frame there, as I mentioned, very short term, from a few seconds to a few minutes, and you want to grab a few of those a day. Day trading, now you can use this analogy, compare that to a lion. So that's medium speed, high profits, a medium risk. Usually pick a side of trading. Beginning of the day, you think, the share's bottomed out, and you think, okay, but hopefully by this afternoon the market's gone up, and I'll take out or close out the trade. But the main idea that you finish the trade with either a profit or loss, but it's in one day. You don't carry it overnight. Okay, so it's someone that prefers to start and complete a task on the same day. That's a day trader. And then most of us will be falling into this category, a swing trader. Now you can look at a rabbit or a hare. So we're going for medium speed, medium profits at low risk. So this kind of trade suits someone that cannot monitor the trades or the charts the whole day. So you might look at the market at what we call end of day, tonight, when you come home from work, look at the market, analyze certain trades, and then place the orders, and what we call pending orders for the next day. So that's where most of us will be in that situation, and that's what I am. I'm a swing trader. So I use a combination of some technicals and fundamental analysis. I combine both together, what I call rational analysis. The more I know about a certain share or sector or industry, the better my chances are. But yeah, the whole idea is to identify potential entry and exit points. And then also the other one there is position trading. This is a bit more sort of being a buy and hold investor. This is a more of a intermediate buy and sell trader, but a bit more longer term. There I use the analogy of a tortoise, low speed, you don't need a lot of time for this, medium profit and low risk. You see I use a slide just now for first trade, highlighting what I call a position trade. So you look at more fundamental analysis, trying to determine what's the company's intrinsic value, are they undervalued or overvalued? And then you use technical analysis or charts as a secondary tool. So this would suit more a patient or excitable or least excitable a trader as such. Okay. So yeah, I've gone one step further. What you would need as a scalper, you would need decisiveness, being flexible. You need a lot more money. You can see in the bottom table there when I talk about the more capital, if you want to trade index futures specifically, the margin requires much more. And you'll see it on the next slide also. More time commitment. If you're scalping, you're sitting there in and out the market a few times a day, you need to be in front of your computer. So yeah, you need more skill, obviously a higher risk tolerance, and obviously a lot more capital. Day trading, discipline, flexibility, time commitment, and as I mentioned, most of us will be falling into that category of swing trading or position trading. Yeah, you need some discipline, you need some understanding of charts and technical analysis. Position trading, it's more patience and things like that. So if you look at all the different kinds of things you can trade, and I'll go into more detail in the next few slides. Index futures, you're trading the Aussie or trading the OMI. Scalping, you're in and out there for a few points. Currency futures, the same thing. So high skill required there, a lot of other factors involved, be it interest rates, be it exchange rates, political risk, etc. There's a lot of things more involved there. Most of us will be focusing more on shares. When you're a novice starting out, I suggest starting out with shares, because obviously there's limited risk. It's not a geared product, so you're not going to lose more than you got invested. You can also look at single stock futures and CFDs. One thing I haven't mentioned here as a stepping stone between shares and derivative products like single stocks and CFDs is things called warrants. I traded warrants many years ago. They're not so popular right now. I just find they're very manipulated. They're all manipulated by the banks. But yeah, it's another way of getting involved there. So you only lose your premium. That's the worst case scenario. Look at the next slide here. Here's a slide of first rand. This is looking at technicals. This is what I say, chart. A few weeks ago, we came out of a company update on first rand. We gave it a buy recommendation with intrinsic value of 90 rand. They're trading around about the moment about 60 rand. So you got 30 rand upside potential. You can see how the share is basically testing support levels. Anticipated breakout above that descending, what do you call a resisting trend line soon. That'll be a trigger to enter the trade. You see it's trading below what's moving averages, it's trading below 200-day moving average. So ideally, this will be a high risk, high returns trade. But this is what I say, it's ideal for position trading. If you believe it's a good quality company, you're buying low. You can see also there, the bottom part of the graph, the MACD indicators trading in what you call oversold territory. Can only go up from there. If you hold it out and you anticipate that it will eventually get to 90 rand, you will make your money. So that's what I mean by position trading. That can take a few months, a few weeks to a few months. Okay. So let's talk about some of those PSG trading products available. Index futures, and this is again not for everybody. Basically, you're trading the future on the top 40 index. So the index is some points. It's trading the exposure. You're 10 times the value of the top 40. This is yesterday at 65,220 points. So multiply by 10. Your exposure is 652,200. You don't have to put that down. You do put on what we call initial margin. Initial margin currently for the index future, you can see this is the December contracts around about 60,000 rand. You put it on 60,000 rand to have exposure of 652,000. Okay, so again, it's not for everybody, but they're very, very cheap. Number one, and number two, they're very liquid. You get in and out very fast. But every point the market moves is 10 rand. So you want to grab at least 25 points or sorry, you can see the price, the cost. It's only cost 25 rand for the trade. A lot of guys will try and grab 100 points at a time. It's 1,000 rand profit in and out the market. So that's what we call the Aussie. The smaller version of that will be 10%. That's all me. Your exposure there is only about 65,000 rand. Your cost is 5 rand per contract. That's 1 rand a point. Yeah, and you can see what the margin is required there, 6,000 rand. Currency futures is another way of looking at it, especially when you want to have exposure to the rand to the dollar, euro to the dollar. So the rand to the dollar, rand to the euro, etc. Remember, it's currency pairs, not forex. We're not trading forex. This is a JSE regulated product. So the contract value is 1,000 of underlying. So the underlying, for example, $100,000. The rand yesterday was trading at 1903, 1909. So exposure is roughly about 19,000 rand. You don't put that down, you put roughly about 10% margin down to have 100% exposure. So the currency pairs you can see there, USD to the rand, euro to the rand. So that's foreign currency to the rand. There's no money going offshore. Okay, and it's very, very cheap also. It's roughly about 20 rand per trade. per contract rather. Okay, and then single stock futures, we only trade the top 100 stocks. One contract's about 100 shares. So it's roughly about 15% deposit. So it gives you a gearing about 6 times. So the share moves R1, your single stock future will move R6. Just understand that. So you can also see that it's very capital efficient. If you had to go buy ABSA shares, that trade yesterday we're trading at 170 Rand. 100 shares will cost you 17,000 Rand. So instead of putting down 17,000 Rand, only put down initial margin for ABSA contract there. You can see it's what we call ABSA. The N stands for neutral, dividend neutral contracts for December. You had to put down 2,284 Rand, which is roughly about 13% margin. It also gives you 7 times gearing. Okay. It's also very cheap compared to trading shares at 0.4%. Excluding that plus the market maker 0.4. There's also a booking fee only on the opening side of the leg. So they're very capital efficient and obviously cheaper than trading shares. CFDs, I would suggest trading CFDs first if you got it, because it's just easier to understand the mechanics behind it. Also trading the top 100 stocks, the top 40 and the mid caps. So the first top 40, if you're trading a top 40 stock like First Rand or Capitec, it's a 15% margin you would need to put down. If it's a mid-cap stock, you need to put down 17.5%. The main thing there to understand is there is minimum exposure. So the minimum trade exposure must be 25,000 Rand. So 15% of 25,000 would be 3,750 Rand. And on a mid-cap stock would be 4,375 Rand. So you can see there, if I wanted to buy ABSA shares, I would have to increase, instead of buying 100 shares, I have to buy it up to 148 shares to be equivalent to make it a valid trade of over 25,000. So yes, single stock futures do give you a bigger bang for your buck. I like single stocks, but it's just easier to understand CFDs as a stepping stone. By the way, all these different accounts, single stocks, come together with index futures. Okay, they're separate mandates, separate registrations, the same as CFDs. Okay. Currency futures also separate registration, separate account, separate mandate, separate risks. Okay. And then lastly, just JSE listed shares. We trade all these shares. If you want to be a trader, ideally you want to be trading top 40 stocks. They're more liquid. Everybody knows them. You can also go down as low as the mid caps. And once in a while, you might want to trade small cap stocks. This is trading shares, not trading derivatives. So there's no minimum investment required, but just be aware of the costs. So our cost works on a sliding scale, 230 Rands the minimum, excluding that. And you can see the whole thing there. I'm running out of time, so when you get the slide, go into more detail. So guys, just quick summary. Just being a self-awareness, you're posing, you do what I call a SWOT analysis, your strengths and weaknesses. Understand your trading style that you want to get involved with. Also understand the investment product, the vehicle that you want to trade with. Understand that. Goal setting is very important. Again, linked to your trading plan. Why do you want to trade? What is your goals and things like that? Risk management, very, very important in trading. I believe it's more important than the actual methodology. Position sizing, stop loss, all those kind of things. And then emotions, if I've got a trading plan and I'm sticking to my trading plan, it's a big way of eliminating those emotions. And be a quick decision maker. If you've got all your, everything fits together, make a decision, pull the trigger. And then learn from your mistakes. Have a trading journal. I have a little trading journal and I write it down. Every time I buy and sell with hindsight, I could look at my trades and learn from it. And I always say, rather use, a short pencil is better than a long memory. So have it written down, and you'll start seeing a pattern happening. And then be patient in your trading. I use what I call breakout trading. You have to be patient in that kind of trade strategy, and also just be self-disciplined. Okay, so I'm going through that very, very quickly, but let's see what kind of questions you guys have. I know, as I say again, I've gone out of time here. I get excited and I get carried away. Hey, let me see what kind of questions you guys have. Cool. Here's a question from Johan. He says, do you plan to have a risk management or trading strategies webinar soon? Yeah, good question, Johan. I must probably have it next month. Okay, as a follow-up. Timber, I want to make extra money trading. How can I do it? Yeah, Tim, as I mentioned, this thing here depends on a lot of things. Depends on um, your trading capital, your level of knowledge and experience. I suggest start off shares, start off what I call position trading, and then slowly gain more knowledge and experience until such time you're a bit more confident, and then obviously increase your trades, maybe switch over to swing trading. Okay, doesn't look like there's any more questions here. But guys, from my side, thank you very much for being on this webinar. Now I've gone over time again. I'm sincerely apologize. Just close this quickly. Then Hans, with just some summary, I think it's out the way there. Okay, all these different investment products I was talking about, or these trading products, I suggest go download and look at what you call the key information document. But any questions you guys have, you're welcome to drop me an email. But from my side, this, as I said, is being recorded. I'll be able to send it out hopefully the next day or so, as well as the PDF of this presentation. But any questions you guys have, you're welcome to drop me an email. As the wealth@psg.co.za. You can also phone me on the OneStream number there, 0868 000 368. So from my side, thank you very much for being on this webinar. This is my disclaimer. Everything I spoke about here is for education purposes only. I'm not there to rush out and tell you what shares to buy, but it's for education purposes only. And then lastly, as I say, thank you very much for being on this webinar. Until next month, bye for now.